And we're just going to talk finally about the IMF, Laurie, which has raised the forecast for Saudi GDP growth. Can you tell us more about this too, please?
Yeah, look, this is a really big upgrade. This is from 3% to 3.5%. The IMF is always tinkering with its forecast, but this is really quite a big increase. And when it comes down to, and maybe a little bit optimistic, but the real vote of confidence that the IMF is giving here is they're essentially praising Saudi Arabia for realizing that they can no longer depend on oil and petrochemicals, that is not a long-term solution to growth, particularly in an economy where there are so many young people who will be hitting the job market over the next decade or so. Now, Saudi Arabia has had some very well-publicized plans to expand into sport, into entertainment, into construction projects, building new cities. And the IMF is very, very happy to see that Saudi Arabia is doing this. And we only have to look at the oil markets to see that Saudi Arabia really is, pursuing a strategy that makes sense. The world is using less oil. We know this, whether you're, support renewable power or not. We know that for each bit of GDP that is produced, it takes less energy than it did a couple of decades ago. But for economies that are dependent on oil, we saw almost no net move in the oil price after all of the fireworks we had in the Middle East last weekend. Price of Brent crude is roughly where it was before Israel, started, upping its attacks on Iran, and then America stepped in. Oil is pretty much back to where it was before that at a historically low level. So it shows you that Saudi Arabia, which is the dominant member of the OPEC cartel, can no longer really dictate the price of oil. And when they cannot do that, when the cartel cannot artificially lift the price of oil, it may be time to look at other sources of economic growth.